Good evening, Mep here, Mep Investments. So I have the futures up here in the Thinkorswim mobile app. Let's take a look at what the dollar's doing. Dollar's hovering on the 92 level at 91.80. Currencies, Aussies pretty flat, pound up a little bit, loonie down a little bit, euros flat, yen up a little bit, pesos flat. We opened up at 6 o'clock, so we're starting to get things going. New Zealand dollar up a little bit and Swiss franc up a little bit. Bitcoin was over 60,000, 61,000, and pulled back to 50. Let me pull up the 2-day chart here. Oh, maybe I have to go intraday, sorry. All right, so it hit a high of 61,255. Right now, traded a low of 56,235. I don't have any Bitcoin. In my opinion, best Bitcoin play correlation would be Square or PayPal. That's my 2 cents on that. In the crypto world, that's the way I would play it. Oil was down today, then it got a bid to finish the day at 65.35. I think oil still goes higher. And pull up the day chart here. So we had a low of 64.13, and we're back up to almost the highs. It's $1 higher plus from the low intraday. S&P at 39.53.50, down 475 in the after hours. During the day, we hit, and we were up nicely today. I want to say more than 20 handles. Let me see here. Why don't I have the, that's weird. Usually I have the prices up there. Let me see, I'm opening it again and see if it comes up. So yeah, we were up 25 handles on the S&P, Dow Jones 174, and NASDAQ 139. Gold hanging around 1730. What else? Copper 413, still hanging over the $4 mark. Hogs were down a little bit today, still holding the 90-cent area. Lumber, can't recall if lumber was down in the regular session. Low of 845, high of 876, where it's closed right now till tomorrow. Small caps down 650. They were up also in the regular session. Dow Jones down 62. I just had told you it was up like one something. Net gas was down 10 cents and it's flat right now in the regular session today during the day. Palladium, platinum are up. What else? Silver was up nicely today. The metals did okay today. They were all up okay. We got silver over 26 and a quarter right now. The VIX was almost down to 20. I want to say it was a low of 20. Yeah, 2010. And right now we got a little bit of bid back up to 2050. Grains are not open yet, but they were all up nicely today. We'll see how they open at 8 o'clock. Bonds getting a little bit of a bid. 30-year up 7 ticks. 10-year up 2.5 ticks. And the 5-year up one tick. Overall, quiet day. I only had probably like 8 trades. I did a call debit spread in JWN in Nordstrom, and I did another call debit spread in CCJ. What's the name of CC Cameco? They're in Canada. Seemed pretty bullish, the action. Sold my covered call in Overstock, and got into AQB and a penny stock that has to do with shrimp. So I did some exposure to the fish industry. AQB does salmon, and shrimp obviously does shrimp. It's a small cap. Pete Nigerian, that guy that comes out on CNBC, I think is on the board of directors of shrimp. So, and AQB does they help grow salmon quicker. So I wanted to get some exposure to fish. I'm trying to put things on the board that seem to be trending, or they make sense in a tougher economic environment. I think the recovery, I know there's a lot of stimulus out there, but we still have a lot of people losing jobs. 700,000 jobs a week has been coming out. We still have trade deficits. We have higher gasoline prices. So, and I think we have inflation around the corner with all this stimulus coming out. Good thing is people are getting vaccinated, and hopefully things get better. In regards to, it was very, very, very quiet today. I want to say it's probably one of the quietest days I've had this year watching the market. They're waiting for the Federal Reserve to talk on Wednesday to see what the Fed's going to do with the bond market. I don't think they'll do anything. I think it's too soon. I may be wrong, and I don't think the stock market will like it. But that's just my opinion. But they will step in, because we cannot afford, as a country or a government, higher interest rates. So they have to keep the Keynesians, they're called Keynesians, they want to keep the boom alive. All they do is, their motto is low interest rates and print money. And I've been watching different economists that I love, that I watch all the time. Peter Schiff, Ron Paul, to name a few, and they've said it for years, and nothing has stopped. Interest rates have stayed low forever. The money printing hasn't stopped, and at some point, the world is going to realize that we're never going to pay this back. We're just borrowing and borrowing, and the Fed is just going to print more money to buy more debt, so we can just consume goods, and we need to get back to a sound economy, in my opinion. An economy where people save and we produce goods. And look at these trade deficits that we have. Anyways, today the airlines were doing well. I guess people are the money was flowing into opening trades, opening economy trades. So you had the movie theater up, AMC. You had all the airlines were up. If you want to play the airlines, you can also through an ETF. You could do it through JETS. It's an ETF called JETS that gives you exposure to all the airlines. If you don't want to try and pick a winner or a loser, it's just a basket of them. It's called JETS. Here you go. It was up 3% today. JETS up $1, and it has all the airlines. It's a basket of airlines. So you want to play it that way, it might be easier. I just want to give you that heads up. General Electric had a nice bounce back. So did Tesla. I did see some of the marijuana stocks doing better today. There's talk about, I think, New York passing legislation and getting the ball rolling over there with the weed. What else did I see today? The banks took a pause. because yields were down. I did see some casinos and hotels, but the stuff that I saw the most today was like the airlines and like hotels and stuff like that. Cruises maybe as well were doing well, but overall it was pretty quiet and choppy market. To be honest, it was a pretty boring market. I usually am entertained by the market, but in my opinion, it was very boring today. Watching the tape, I only had like 8 trades. I was up today a little bit, and not being too aggressive. We shall see what the Fed says here on Wednesday in regards to rates and what they're gonna do with future bond purchases. We had economic news today. Let me pull up the calendar. Today we had the Empire State, and tomorrow we have, well, tomorrow the FOMC meeting begins. Says that they got CPI tomorrow. I'm not sure if that's accurate. I know that we do have retail sales tomorrow. That's an important report. Macy's and JWN Nordstrom have been acting well. So was Kohl's. So I think that might be a reflection of maybe decent retail sales. I'm assuming that retail sales might be okay with stimulus money rolling out, and people trying to get ahead of the curve. They should pick up the sales. Remember, with our economy, 70% consumer. We are a consumer nation, and we are in the buying and consuming and services sector. You know, it's all buying, consuming, restaurants, bars, and eating out. We need to get back to manufacturing and producing goods and savings. That's just my opinion, and I think that will be a better outcome for economic growth and a better economy, like some other countries that are doing pretty good right now and have been doing pretty good. So these are the reports for tomorrow. I think retail sales might be the most important one. The Empire, the Empire. I was reading Empire. I have it here. Let me see here. I was reading earlier today. Let me see. Empire State Index news. So the Empire State Manufacturing Index hits 8-month high in March. So the index rises to 17.4 from 12.1 in February. Price index highest in 10 years. The Empire State Manufacturing Index rose to 17.4 in March from 12.1 in prior month, the New York Fed said Monday. Economists surveyed the Wall Street Journal expected a reading of 15, the highest level of the index since the last July, the ninth consecutive reading above zero, which indicates an expansion of activity, which is expected. I mean, we're closed, so where is it going to go? Couldn't get any worse. What happened? New orders index slipped 1.7 points to 9.1 in March, while shipments jumped 17.1 points to 21.1 post-pandemic high. Unfilled orders rose to 1.4 points to 4%. This is pretty. So this here caught my attention. The prices paid index rose 6.6 points to 64.4 in March, the second month in a row for hitting a 10-year high. Prices received rose 0.08 points to 24.2, a 2-year high. So here you have the prices of the goods. So inflation. Expectation in the next 6 months rose 1.5 to 36.4 in March. The index for the future employment rose to the highest level in 10 years, suggesting firms widely expect to add workers in coming months. Both the future prices paid and prices received indexes continue to move higher. Big picture, the Empire State Index mainly gets market attention because it is seen as a leading indicator of national manufacturing trends. In February, the ISM index, seen the best gauge of factory activity across the country, climbed to 60.8, its ninth consecutive month of growth, and the fastest pace since the pandemic. Economists expect the factory sector to keep humming along as the drag from COVID-19 fades, although there's some supply disruption causing bottlenecks and higher prices. Very important, higher prices. What they're saying: the manufacturing sector was likely a continued source of growth in the first quarter and will likely remain one well into the second quarter. TJ Conley, head of research at Contingent Macro. I don't know about that. Manufacturing sector was likely continued source of growth in the first quarter. If that were a fact, why do we only grow 7,000 jobs in the manufacturing sector in January and February? So I don't agree. Some supply disruptions causing bottlenecks and higher prices. Higher prices are coming from inflation. Make sure you look at your portfolio. And I was reading last night there's a picture here of this right here. When there's inflation, historically this chart shows good places to be during significant but relative moderate inflation. Long commodities, short long-term bonds as inflation rises. Real assets, commodities, platinum, real estate, and you can take a look. It keeps going down. Diamonds, gold, collectibles, etc. Remember, inflation erodes bonds, especially bonds that don't have high yields. And historically, our yields have been higher on our bonds. So that's why I'm short ZB, ZN, and I'm short these futures, and I'm doing okay. They were up today, maybe dead cat bounce. We shall see if the Fed intervenes. I don't think the Fed is going to intervene, and I think they will disappoint the market. But we shall see. Oh, grains opened up. They're all open green. So anyways, that's my take on the markets. It's been quiet. We'll see tomorrow. The Fed starts the FOMC meetings, and we get some retail sales report. And Wednesday is when we should see some movement and see what's going to happen with the Fed. Like the video, share it, subscribe, hit that like button, and I'll see you in the next video. Bye-bye.